I think we're on the other side of liquidity negative. And my personal Bitcoin thesis is Bitcoin equals technology plus fiat liquidity. More fiat currency units that are issued and the more technology progresses, the more Bitcoin is going to be able to serve the world and, in my opinion, do well. And so I think it's a very exciting time for Bitcoin on the other side of 100K and seeing the US structurally short this volatility, have to provide liquidity to give participants leverage to lend it money and eventually debase the debt. For those that understand money and its role as a market good that you don't consume, that's accessible, sellable, and liquid for you to store and exchange time and energy, it has to be available for anyone to buy in any quantities. And I think one of the most underrated parts of Satoshi's innovation is the design of the system is that you can own as much as you want. It doesn't give you any more influence over the rules of the system. And so
as Bitcoin continues to gain global momentum, all eyes are on the key players driving its next phase of adoption. Today, we're joined by Jack Mallers, the outspoken CEO of Strike, who's doubling down on his bold vision for Bitcoin's future. Mallers believes we're entering a new monetary era, where Bitcoin isn't just digital gold, but the foundation of a parallel financial system. The next step up is unavoidable, according to Mallers, who isn't afraid to mention $1 million in Bitcoin as a genuine possibility given Wall Street's inundation into the market and Strike's global expansion. Mallers contends that Bitcoin is now too huge to ignore, supported by growing institutional demand, eroding confidence in fiat currencies, and the emergence of Bitcoin native infrastructure. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you and enjoy the video.
I think the world was caught offside a little bit in that post-Trump's inauguration, he was actually liquidity negative, not liquidity positive. And so I think the market was caught a little offside. But I think that that's changing. What I would say on the macro is that the United States is structurally short volatility. What I mean by that is, going back to my macro story, the United States has no marginal lenders anymore. Who is willing to lend someone, if your buddy, Natalie, was $36 trillion in debt, would you lend them any more money? Probably not. So, if you look, China, India, Russia now isn't even allowed to lend the US money anymore, buy these instruments like the 10-year. So who is buying them? Our own banking system and hedge funds. And so they found it. And now they're providing the liquidity. Now you're seeing M2 go up. Now you're seeing Treasury Scott Bessent come out and say, hey, we will propose Treasury buybacks. You're having Jamie Dimon say, please change the supplemental leverage ratio rule. Give us more leverage. So I think we're on the other side of liquidity negative. And my personal Bitcoin thesis is Bitcoin equals technology plus fiat liquidity. More fiat currency units that are issued and the more technology progresses, the more Bitcoin is going to be able to serve the world and, in my opinion, do well. And so I think it's a very exciting time for Bitcoin on the other side of 100K and seeing the US structurally short this volatility, have to provide liquidity to give participants leverage to lend it money and eventually debase the debt. What I would say is, if you're a country that's structurally intended to operate in a deficit, which the US is, we kind of walked through that. We have to operate in a deficit for now. I know that Trump's talking about removing the deficit, but if you look at Treasury Secretary Bessent's goals, he's just looking at shrinking it, but maintaining one. So we have to operate. Yeah, we have to. Now, that means if you think of us like a business, we're an unprofitable country. In order, how does someone meet payroll if they can't sustain themselves? Well, they got to get a loan. They got to get capital from someone else. So the question is, who's giving us the loan to continue to finance ourselves as a country? It used to be our trading partners. It used to be China, Russia, India, Japan. It's not anymore. It is our own banking system and levered hedge funds in the Cayman Islands. And so what you see when Scott Bessent comes out and says, hey guys, everyone calm down, I'm going to do Treasury buybacks.
The growing adoption of Bitcoin by governments, major institutions, and mainstream media shows that its value is finally being recognized on a global scale. But according to Jack Mallers, this is still just the beginning. He compares Bitcoin's early years to where we are now, with the spotlight shining brightly on Bitcoin ETFs and a surge in institutional interest. Mallers sees this as a major turning point in the financial world. He points to BlackRock, led by Larry Fink, as a key force in pushing for regulatory approval of Bitcoin ETFs. These kinds of moves moves, he believes, prove that Bitcoin isn't just a passing trend. Instead, it's becoming a permanent fixture in global finance and a powerful hedge against inflation and currency devaluation. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
And I think that there's a certain part of the financial system that needs help. And I think Bitcoin can solve their problem. I think it's good for Bitcoin. I think it's good for them. I think it's good for the world. And I don't see why they wouldn't be allowed access to a neutral money that acts in their interest. That's just my personal opinion. And sometimes I find it funny that someone wants to kick someone out of Bitcoin and think that they're defending the ethos. I get it. I get that institutions and banks and governments have not been friends of the people historically. And I don't disagree with that. But it's part of the future I want to see is everyone has access. Yeah, I think it's funny when a Bitcoiner comes up to me and says, I don't like that BlackRock's buying Bitcoin, kick them out. Like, well, excuse you, mister. That's not how the protocol works. I mean, Bitcoin is neutral distributed software. It's there to buy it if you want to buy it. It is a money that can be used for settlement amongst enemies. It has no bias, and that's the point. And so for those that understand money and its role as a market good that you don't consume, that's accessible, sellable, and liquid for you to store and exchange time and energy, it has to be available for anyone to buy in any quantities. And I think one of the most underrated parts of Satoshi's innovation is the design of the system is that you can own as much as you want. It doesn't give you any more influence over the rules of the system. And so it's not threatening for institutions to get involved. They can buy it just like you can, as much as they want, with any appetite. And I think it's a little bit anti-Bitcoin to say, we don't value those people's time and energy and their life story and their history and their participation in the global financial market. A lot of these countries were decimated, economies decimated, and being able to produce stuff and sell it to the United States was a good deal for them to get back up off the ground. Okay, that's not a very sustainable relationship because effectively we are printing pieces of paper and getting real stuff in return for it. And there's the Triffin's dilemma, which is a very well-known concept, which is if you're the world reserve currency, you're going to hollow out your manufacturing base in your middle class because you're delegating and outsourcing manufacturing an iPhone, manufacturing the food you consume, manufacturing the oil and the energy that you consume. And all you're doing is importing the real stuff and exporting this currency. And so it was intended to be a short-term solution that ended up compounding over a century. And so then what do we have today? We have the US, which naturally, because of the design of the system, has $36 trillion of debt and operates in what Trump calls a deficit, meaning we just push out pieces of paper and we operate trade unprofitably to import the stuff. And someone like China, who's become the best manufactured given the design of the system, they're operating in a surplus, which is $1 trillion plus.
Jack Mallers' closing remarks serve as a potent reminder of what Bitcoin actually is, an open, impartial monetary network that is accessible to all people, irrespective of their financial situation, institutional affiliation, or background. He responds to certain Bitcoiners' concerns about big organizations like BlackRock getting involved in the market. However, as Mallers clarifies, Bitcoin is inclusive. Satoshi created the permissionless program so that everyone, from powerful fund managers to sovereign citizens, could use it. Since freedom, openness, and accessibility are at the heart of Bitcoin, Mallers contends that opposing institutional involvement is actually anti-Bitcoin. Like people, institutions have a right to invest their time, money, and energy in the safest monetary system that has ever been developed. In many respects, Bitcoin might even be a lifeline for the established financial sector, a tool that aids in repairing a dysfunctional international system based on exploitation, debt, and unsustainable trade patterns. Mallers believes that worldwide inclusion is key to the development of Bitcoin. The goal is to dismantle outdated power structures and provide all individuals, businesses, and even governments with an equal opportunity to exercise economic sovereignty. For this reason, he is still extremely optimistic about Bitcoin in 2025 and beyond, because there will only be a greater need for neutral, sound money as the global banking system continues to collapse. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.